and welcome everyone to Gold Asset of the Day for the 17th of March 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, what do you need to know for the week ahead? We have seen historic moves in the market this week. I mentioned this on the week ahead commodity report that the gold to silver ratio has broken out to 122 to 1. This is the highest the gold to silver ratio has ever been, and with that we have seen silver breaking down to 11-year lows, we have seen platinum breaking down to 18-year lows, and gold at the moment, just earlier on today, has broken down and retested those 3-month lows. So right now we're seeing gold trading at $1,490 per ounce, but we really do like the volatility that we're seeing at the moment. Off the back of the open on Sunday, we were able to capitalize on a quick 200-point breakout to the upside as a result of the Federal Reserve cutting interest rates. They weren't scheduled to actually hold the press conference or have an FOMC statement to cut rates until Wednesday, but they decided to go with an emergency rate cut again on the Sunday open. And with that, that's provided some immediate opportunities for gold. On the pullback that we actually had earlier on today, we've retested $1,465 per ounce. Yesterday, we tested 1,450, which is a very magnetic level going back to November. That level held previously. We've started to actually build positions at this zone. So we're currently up just over approximately 250 points on our latest trade here, which we are looking to protect very shortly, in fact, and start to take some partial profits off the table. The volatility that you're seeing at the moment on gold, a move which we're seeing just within one day, would typically take up to 3 or 4 weeks to materialize. So this volatility, if you can catch it right, both on the sell short side and the long side, provides you with some really amazing opportunities right now to capitalize on these moves. And especially if you are very focused in, you focus on a select number of markets. For us, of course, at the Gold and Silver Club, the precious metals and the energies. These day-to-day movements, if you can catch them right, the turning points for trading these ranges, both from the long side and the sell short side, it's amazing the opportunities which are presented right now for traders. Typically, especially during the summer months, you might need to wait several weeks to get this sort of volatility. Right now, we're seeing it just day to day. Last week, for example, gold from the highs broke down from 7-year highs at $1,700 per ounce all the way down to $1,505, over 2,000 point move in just 1 week. Now, many of you have been in touch about this because we discussed it right at the end of February and the beginning of March, that we saw very clearly that hedge funds and money managers had started to significantly trim their net long positions, and we started to see sell shorts pick up momentum as well. Now, of course, it has been a very range bound month. We've broken out to 7-year highs, we've broken down to 3-month lows for the metals, but overall you have seen where those big sell orders which have been in the markets now for several weeks from the hedge funds and money managers, they played out, right? You've now seen that massive sell-off to the downside. Many of you have been in touch, very grateful for the fact that we were highlighting the fact that hedge funds and money managers were building their net sell short positions, and you really wanted to be careful not to FOMO in, to be aware that we might get a seasonal bearish move here to the downside as we start to get throughout the month of March into April, which typically is not as strong for the metals. So we've definitely seen that, but there's opportunities on both sides of the market. If you're nimble, a savvy trader here, you're able to quickly take some profits off the table, protect your trades. You can do extremely well in these market conditions. With the current volatility, it's just perfect for trading. So with that said, where does that leave us with gold right now? Well, at the beginning of the week, we broke down to $1,450 per ounce. That is 3-month lows. So just go back on the chart, you'll see where we got supported around those levels in November and December. We remember that very clearly because that's where we built all of our long positions that we capitalized on throughout November, December, January, where ultimately we banked over 2,000 points on the trades and we started reverse position. And we've also been just trading the volatility and the ranges here on gold. As I mentioned, we're already up this morning over 200 points on our latest long position that we've established. In fact, it's up over 250 points at the moment. Gold's just broken back above $1,500 per ounce. But you have to be very nimble. We could see another sell-off later on in the day, or we could break out back further, back towards the 1525, 1550 handle. The important point is you want to be able to watch the correlations, so such as platinum, silver, the gold to silver ratio. Certainly right now, you also want to keep a very close eye on the stock market. So for example, the S&P 500, each time we are seeing pressure to the downside, generally speaking, you're seeing this across the board, that it does have a knock-on effect with other markets. So where you're seeing a significant sell-off, as we saw on Monday with the S&P 500 selling off, limit down, breaking down over 7% on the day. This is where it took down a lot of other commodities with it as well. At the same time, when the S&P 500 is getting bid and you're seeing an increase to the upside, this is having a positive impact on many commodities too, such as gold, which does tend to be supported when that's happening at the moment. That's not always the case, but right now we're seeing that. With the gold-silver ratio, it's broken out to historical moves that we're seeing on the market right now. 1450 so far for gold is a base this week. So if we hold that level, we keep seeing buying evidence of that zone. We came down around to about 1460, 1465 again today. We built in our positions near to that level, and we're currently taking advantage of a retracement higher. That level really needs to hold for gold at the moment in the short term in order to then propel gold higher above 1500, back towards 1550 and so forth. If that level was to break lower, 1450, the next magnetic level, of course, is below that is 1400. This is very similar to what I suggested last week. If you were to break below the 1550 level, then gold was going to 1500. That's, of course, what we saw happen last week. So for now, the base in price this week for gold is that 1450 zone. We're taking advantage of retracements from that level, but again, being very nimble with the price action. It's only Tuesday at the moment, so we're bound to get more developments throughout the week, so just be mindful of that. At the Gold and Silver Club, we're keeping all of our members constantly updated with the narratives, the latest news items, trades that we're taking, of course, in the markets as well, and just being very nimble with that. So just day to day, these do change. So we are seeing the cycles change on a regular basis right now with respect to either gold getting bid, or we're seeing a rollover back to support and so forth. It's just incredible to be able to trade the volatility and the ranges at the moment. Some really fantastic opportunities for you right now. But of course, you do need to be savvy, be aware of the news items, be aware of when we're getting these correlations in the market, such as the S&P, platinum, silver, which can also have a big impact on gold. And of course, with that, I do wish you good trading.